Hello everyone, welcome to the Wisecast by Sundaram Mutual. We have with us today Bharat S., Senior Fund Manager Equity and Head of Research at Sundaram Mutual. Welcome to the Wisecast, Bharat.
Hi, good evening.
So our topic of discussion today is Sundaram Rural and Consumption Fund. Are you ready to begin?
Sure, we'll go ahead.
All right. The first question to you, Bharat. What is the positioning of Sundaram Rural and Consumption Fund?
So Sundaram Rural and Consumption Fund has been among the earliest funds to be positioned in the India consumption thematic. So this fund invests across a broad range of subsegments of consumption ranging from FMCG, brown goods, white goods, retailing, apparels, building materials and a host of other subsegments. So this fund also is unique in nature where we capture some of the other segments which are linked to the consumption thematic and has strong linkages over there. So this is predominantly the retail finance piece where a lot of these franchisees with last mile connectivity to the consumer form an integral part of the India consumption story. And a uniqueness over here again is the flexibility to be positioned in segments which have a significant share of the rural consumers' wallet share. So agri inputs and crop protections again form an integral part of the fund in terms of capturing the consumption growth over the segments in the rural markets. By its mandate, the fund is also disallowed from investing in specific segments, and to name a few industries like petroleum, industrials, engineering, capital goods, software, export companies. So these are certain segments where we are restrained from investing.
So what's the strategy we're pursuing in this fund?
Yeah. So in terms of the fund, this is a portfolio where we have around 45 to 50 companies on a diversified basis. The portfolio's current positioning is around 67% in the consumer discretionary, around 20% in financials and around 6% each between building products as well as the crop protection products. In the medium term, the strategy is largely anchored towards foods and consumer discretionary as a theme. So this is something where we are probably a decade behind Chinese markets, especially in case of discretionary as a segment. If one recalls, since 2001 when the per capita income levels moved up in the Chinese economy, we saw a double-digit growth in the durable space consecutively for the next 11 years. The Indian economy is probably somewhere around the corner in terms of inflection point, and this could be a catalyst for some of these sub-segments such as white goods, brown goods or appliances and electronics to grow sustainably in the medium term. Similarly, foods as a segment is an area where the adoption or shift towards packaged foods is very palpable when one looks at the consumer behavior, and some of these companies which have reflected in the portfolio have been experiencing it in terms of growth rates for almost more than the last 6-7 years in a very sustained fashion, and these are undercurrents which play out for a much longer time in terms of a growth story. And lastly, within the retail space, again, the anchoring is towards the retail financial franchisees, which are taking themselves beyond the Tier 1 markets into the Tier 2 to Tier 4 markets, and the financial services providers such as insurance, where a deeper penetration of products would provide a medium-term growth perspective and fair amount of visibility. So from a strategy perspective, this is where the large part of the anchoring is towards, and from a stock selection perspective within these categories, again, this follows the 5S philosophy that we have at Sundaram. Look at businesses where the opportunity landscape is fairly exciting and where the scalability is there. The preferences towards companies which have sustainable competitive advantages, strong cash flows, simplicity of business model to understand, as well as a sound promoter pedigree in place. And if one looks at the current portfolio today, a large part of the portfolio within the subsegments of foods or discretionary or the other segments is towards companies which are market leaders with established credentials in their respective segments. So that broadly would continue from a stock selection perspective, and we believe foods and discretionary would form a large part of the core portfolio in the medium term perspective.
That's interesting. So what is the outlook for consumption and what are the structural drivers?
Yeah. So from a consumption theme perspective, there are multiple drivers underpinning it. The first broad takeaway is, if you just looks around the Indian context, the Indian middle class is much bigger in terms of pure numbers compared to the entire North American subcontinent. So that's the landscape that we're talking about when it comes to consumption. And this is a phase where the Indian demographics is clearly having tailwinds in terms of the working age population and the increasing disposable income. Apart from that, at a micro level, there have been 3 or 4 factors which have been strong drivers of consumption growth across categories. And to name a few, the rising mix of the affluent population, clearly, if you look at the households with income levels, say more than $7,500 per annum, the mix of the households has already moved up in the last 5 years from 23% to 30%, and it's expected to move another 5 percentage points in the next 5 years. Each of the additional spend by these households go largely towards discretionary as a category, and which funnels a non-linear growth for the segments associated with it. Likewise, if we were to look at the emergence of financial penetration today, there's been a much higher, deeper financial penetration across markets and across various products within the financial system. This has been an instrumental driver for certain categories such as durables, mortgages, and have been clearly supporting the growth of these segments in a much influencing fashion over the recent years. And again, to draw data parallels here, the personal loan to GDP of India has moved up from 9% in 2015 to as high as 13%, the latest available financials of 2020. So that reflects the household leverage movement through a deeper penetration of financial products. The other large driver is the emergence of Tier 2 to Tier 4 cities as consumption hubs. Today, consumption is not about the large metros and Tier 1. If one looks at the commentary of the listed retail universe that we have, there's been a 10% CAGR in the distribution expansion of these companies in the last 3 years. And a large part of it is towards the Tier 2 to Tier 4 markets. The reason why I'm stressing here is that these are getting identified as consumption hubs already, and as the consumer starts explicitly reflecting his preferences in terms of aspirational demands and lifestyle changes, these could be again a clear factor for some of the discretionary segments to keep sustaining their growth in the medium-term perspective. Added to that, from a rural perspective, we've seen certain structural reforms play out in the last quarter. There have been a host of measures, of which 3 stand out. The first one is the dismantling of the APMC regime, which clearly allows the farmer to have his produce marketed across states, across third parties without barriers. The second is again doing away with Essential Commodities Act and certain food grains which were an impediment in terms of price discovery. It allows the storage system to be accessed by private parties henceforth. So this in effect makes a case for the farm community to have smoothened cash flows through the year and avoid cyclicalities. The last one is the loosening up of regulations to allow contract farming, which again is a milestone reform in terms of removing certain inefficiencies associated with the farming system, where India as a country is a country with more fragmented holdings, and the benefits of having consolidated holdings in terms of farm practices has not been experienced hitherto. So net, what we are going to see is a scenario where farm cash flows could be far more stable and less volatile thanks to these reforms, and there could be a scenario where the cash flow starts improving as better price discovery sets in thanks to these reforms. So these are large drivers which play out for a longer term, and which is why from a medium term perspective the outlook can't get better than where we are today. In the near term, clearly, we will have to go through some of the challenges, especially with respect to urban consumption. But like we've seen in the past, the longer term picture always has to be kept in mind when it comes to thematics, where these drivers tend to play out for a much longer period in terms of catalysts for these segments, and some of these companies tend to capture the growth drivers using these conditions as a opportunity to strengthen their business models.
All right. Thanks, Bharat. The next question for you is, What is the outlook for rural income and how are we playing this?
Yeah. So, in terms of the rural consumption, this is a much debated topic today, and there are reasons behind it, of course. So, we are probably in a year where there is a confluence of factors playing positively for the rural economy. The improved monsoons and better farm acreages, which has increased by almost a double-digit pace compared to last year, is definitely going to have a positive impact to the farm cash flows. Added to it, the prices have been stable. The government has been very supportive in terms of the procurement practices. We've seen a double-digit increase in the procurement of key food grains, which in effect stabilizes the prices of the key food crops during the season. And third, more important one is the government allocations towards the farm or the rural schemes. Since 2017, there's been 11% CAGR in the budgetary allocations towards rural schemes. We are at close to 4 lakh crores of budgetary allocation in the current year, and this includes all the PM Kisan scheme and some of the other direct cash transfers that have been initiated. And this also excludes the state level transfers which states like Telangana, Karnataka, Orissa have been embarking on in the recent past. So this is going to be a year in the near term where the farm cash flows improve meaningfully compared to the last year levels, and some of the reforms that we discussed in the previous question underpins a case for having a sustainability of these cash flows in the medium term. And let's also understand that the agri component in terms of the rural economy is probably limited to 50 to 60%. So the agricultural workforce in the rural markets are close to 58% of the overall workforce of the rural segment. The rest of the other 42% comes from the manufacturing and services segments. And over there again, some of the initiatives that we are seeing in terms of kicking off investment cycles by having the Make in India program. This would again kickstart the job opportunities in these areas when the investment cycle picks up, and which should have a trickle down effect in terms of the spending pattern of the rural consumer. So net we are constructive on the rural consumption on a near term and medium term basis, and this is an interesting area for the foods as a segment to look out for, which is one reason why we have foods close to around 35% of the portfolio. The rural consumer tends to have close to 50% of his income pooled towards foods as a segment compared to a 35 to 38% allocation which a urban consumer tends to do. And that's something which would be interesting from a trend perspective to see how some of these companies experience it in terms of growth rates in the coming years.
That's a ray of hope. What are your thoughts on urban consumer discretionary revival?
Yeah. So from a urban discretionary perspective, we think this year could be a year of two halves, where the initial quarters is all about normalizing to the pre-COVID levels in terms of operational metrics, and companies have adopted the strategy of clearly playing it with a cautiously optimistic tone in terms of their expansion plans and conservation of capital. We are still experiencing localized lockdowns in the short term across various pockets of the country. So these are some things which we need to deal with in terms of growth challenges in the short term. But not everything is down and out. We are seeing certain positive takeaways in this phase as well. There are certain sub-segments within discretionary which are in fact seeing a positive rub-off post the pandemic. Electronics is one which is clearly stood out, and this is something which everybody would experience clearly from resonating with the trends around them. Work from home has become an embraced phenomenon across many a segment in the markets, and this has given rise to certain demand trends in categories like electronics, small appliances, to name a few. And likewise, we are seeing some of the other trends getting strengthened. We are seeing shorter replacement cycles across certain categories, like again durables being one, the other one being, for example, paints as a category. Even in the past, we've seen this observation that painting replacement cycles have move from 5.5 years to 3.5 to 4 years, and these trends could probably get strengthened post the pandemic. Shift to branded consumer items as well as packaged foods is another area where we've seen the element of trust rather move up post this event. So these are probably trends which we can see it get impacted in a positive way post this event. And likewise, the policy to localize a lot of consumer items which were hitherto dependent on imports. This again could provide a lever for some of the companies which have been well established in these categories. The categories like footwear, luggages, electronics, again, these are categories where probably companies with certain capabilities in place or investments ahead of the rest of the competition could see it as a opportunity to take the growth momentum up once we come back to the normal levels of economic activities. And just to add a point here again, the most important takeaway in the urban markets has again been the emergence of the digital economy. While the trends were already in place, this is something where the momentum has picked up very sharply, and companies who've been well ahead in terms of creating the systems, they are able to see this emerge as a new channel of reaching out to the consumer. This has been a defining moment, I would say, in terms of the digital channel, in terms of its significance in India. Even in a category like foods, for example, globally, this has been the last category to embrace the digital channels, and in India, we're already seeing companies report a mid to high single-digit contribution from the digital channel to the overall revenue. So, interesting times, I would say, where newer trends are evolving, and we believe in the medium term, one should see this translate into additional growth levers for the companies well entrenched into the space. So from an urban consumption perspective, I think the growth challenges in the short term, while it appears a little away before we really come back to the pre-COVID levels, I think starting second half of the current year and into FY22, we should see the growth momentum come back. Let's not forget that the financing environment has turned far more benign, and this has been one catalyst for the discretionary consumption growth to take off, especially in the urban markets. And we believe that F22 could be again a case of a strong rebound where one has the normal demand along with the pent-up demand kick in a bunched-up fashion.
So within consumption, what would you say are the big bets in the portfolio for the medium term?
Yeah. So on the top bets in the portfolio, we've been fairly bullish on foods and beverages as a category, along with consumer durables. If we were to look at the top holdings, clearly Tata Consumer, Hindustan Unilever, Varun Beverages. So all these reflect the fair amount of conviction that we have on food as a category. And this is something where, in fact, the exposures got sized up in the past year, especially with names like Tata Consumer. And similarly, on consumer durables, we have a fair amount of exposure, albeit in a spread out manner across companies in air conditioners, washing machines, kitchen appliances, light electricals. So this again is a very intended strategy of spreading our bets within discretionary with companies which are market leaders with proven capabilities in space, and not really concentrating it towards a few exposures. We believe that it's a vast category with numerous subsegments, and each having their own differential growth rates and drivers. So from that perspective, durables again is a top weight into the portfolio spread across various companies across various segments. And again, just to draw a comparison on what is the medium term opportunity that we're looking at here, we think this entire category of durables, including electronics, is less than $25 billion in India today, and it's been growing at between 30 to 15% in the last 5 to 6 years. And looking at some of the drivers that we discussed, there's no reason why it can't become a $100 billion category a couple of decades from now. So a double-digit growth is something that we are fairly bullish on, given that categories like air conditioners, washing machines, these are still penetrated at less than 20% in the Indian market. And if you look at fundamental simple reasons where power in terms of availability is becoming more prominent and common in the rural markets, tier 2, tier 3 markets, and availability factor itself drives some of this latent demand to turn into a real demand. So that's, I think, a category which in our view has the potential in terms of double-digit growth in the medium term.
All right. What is the USP of this fund and why should one invest?
Yeah. So this is a very important question. If you were to look at consumption as a thematic, it's an evergreen theme which plays across markets, across geographies at various points of time. There are always new trends of consumer behavior which emerge and which creates categories from scratch. For example, e-commerce in India is still a small market size, and probably it could balloon into a much larger category as we see in some of the behavior patterns that we see around us, and in the years to come we could see opportunities over there as well. So from that perspective, clearly within a thematic allocation, the consumer theme would probably rank among the top of the charts for an investor to have a reasonable allocation earmarked. On Sundaram Rural and Consumption Fund, ever since its launch in 2006, there have been a few key attributes which stand out in terms of being instrumental to the fund's alpha generation over broader benchmarks on a 5-year, 10-year or a since inception period. So we are among the unique funds which have specific focus on segments which are linked to the rural landscape and which gives us the flexibility to tap opportunities when those undercurrents linked to the rural economy play out. The other main attribute would be the ability to identify opportunities early in the curve and stay invested with them for a reasonable period of time. So if you were to look at some of the top holdings that we have in the fund, they started their journey as a small investment and have been in the portfolio for more than 6 to 8 years now as a core holding as the investment thesis played out. And over here, the in-house research of having 9 investment analysts who are sector specialists in their own domain does really help in terms of the ideation process and checking the conviction levels in terms of questioning the investment thesis time and again and building confidence. So I think this is one of the main attributes which is important, especially when one identifies new categories and builds a position onto them. Let's not forget, most of the consumer discretionary categories in India are either mid-cap or small-cap in nature, and it is imperative for one to not just identify such opportunities but stay invested with them as the underlying investment thesis unfolds. The other important attribute again of this fund would be the ability to diversify the risk. Consumption is a very vast area where we have numerous subsegments involved, and from that perspective, the necessity to concentrate in a few bets at the top of the fund is done away with, and we as a fund have approached it in a slightly different manner where we have a diverse portfolio which spans across various subsegments within consumption. So what the investor essentially buys is a basket of stocks which have probably demonstrated capabilities in each of the segments where they are entrenched into, and in that process one clearly diversifies the risk involved, which is typically questioned in a thematic or a sector fund. So I think it's a broad-based investment portfolio that we try to create within the basket of opportunities in the consumption thematic. And when an investor invests in this product, clearly the key attributes which he is subscribing for is the ability to identify opportunities early in the curve, remain invested with them through the period, and at the same time mitigate risk through a fairly diversified portfolio approach that we take. So that I think probably clearly stands out in terms of the fund's approach to investing and why one should look at a Sundaram Rural and Consumption Fund within the thematic basket. Yeah, thank you.
Thank you for taking the time out to join us on the Wisecast. It's been a pleasure having you on the show.
Wisecast is a podcast initiative by Sundaram Mutual. We hope you like listening to us as much as we love presenting it to you. Stay tuned to the Wisecast to learn more about the world of mutual funds and investing. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.